Welcome in to Kick in the Rear podcast. My name is Joe Yarshin. Today on episode 11 of the podcast, we're going to discuss the ABCs of Buying Rental Property by Ken McElroy. So this is a Rich Dad Advisor book series. He has several other ones in the series, several other authors besides Kenny in the series, but this one really was a great read. This one was very informative. It's very textbook, but it's very informative. Lots to get into it today. So we're gonna piece each chapter down, break it down by tips, definitions, and all these little quippy things that are in this part. So without further ado, let's get into it. Starting off with chapter 1, we do have tips, definitions, and I've underlined certain sections. In chapter 1, tip number 1, wealth gives you freedom. Definition number 1, financial freedom exists when your income is sufficient enough that you no longer need to worry about your finances. Tip number 2, to be financially free, you need motivation, good work ethic, and a willingness to learn. Chapter 2 lists fact number 2, being born to rich parents is the fastest way to wealth, but real estate beats all other paths. He kind of goes into what that means by breaking down the stock market versus real estate. He says myth number 1 is the stock market is the fastest way to wealth. He disagrees. He says that real estate is. He discusses what ROI is. I've heard Ken McElroy on his podcast say that every single episode since I started watching about a year ago, listening and watching the podcast. Return on investment refers to the effectiveness of an investment. He breaks down how to calculate it and how the stock market gains versus rental property versus equity from appreciation versus cash flow all benefit from the ROI. He gives and lists 10 financial reasons to invest in real estate. The first one is that real estate has a predictable cash flow. Cash flow is the amount of money that flows in and out of your business. So then he discusses the real estate appreciation and value. That's often tax-free, he says. Real estate can be leveraged. Leverage means using other people's money, OPM. Love that acronym, to make money. Equity is assets minus liabilities, and debt is a duty to pay someone. A lot of good financial literacy terms in this book. If you're new to financial literacy, he gives you a crash course. Rental properties can be depreciated even though they usually increase in value. A depreciation recapture tax on rental property can be eliminated if an investor invests the proceeds from a sale into a more expensive rental property. He talks about different ways to do that in the book and different examples, including the 1031 exchange. It's a very valuable thing to learn about. Equity drawn from real estate is exempt from taxes. A lot of people don't know that. The rich get richer because of their income is taxed as a capital gain, not as regular income. 1031 exchange allows you to cut depreciation, recapture taxes, and defer capital gains taxes. So many great reasons to get into real estate. Two advantages of investing in real estate. You don't have to quit your job. You don't have to be an expert investor. Myth number 2, you have to be wealthy to invest in real estate. There's a lot of ways to do that. If you check out one of my previous episodes, Investing with No Money or Low Money Down by Brandon and Heather Turner, it's a great book. Myth number 3 in this chapter 2, he says you don't always have to put money down to purchase property. He discusses how to do that. Ken goes deep into the advantages of real estate rental investments versus a fix and flip. I can kind of give you a high level overview, but he has a table 2.2 on page 25 that kind of goes through the advantages. And it's either high, low, or moderate versus real estate versus stocks versus fix and flip projects. He discusses some more reasons here of the advantages, and some of those advantages for the rental properties is the historical return is much higher. ROI, 485% versus 89% over a huge period of time when you're comparing stocks versus the real estate. He discusses leverage other people's money, hedge against inflation, predictable cash flow, equity through mortgage payments, depreciation, deferred capital gains via that 1031 exchange. And then profits can be distributed through equity or refinancing the loans on the property. Risk, sweat equity, tax deductibility, capital gains. He kind of defines all these terms. It's really nice. So that concludes chapter 2. Chapter 3, he kind of talks about motivation, hard work, and lead dogs, and kind of like different ways to go about the real estate process. But tip 5, he says, to be financially free, you need to be a lead dog and educate yourself. So he does a big emphasis on education in his podcasting space, but also in his books. And every time he guest speaks on like the Rich Dad Radio Show, I hear him talking about being financially free through the process of education and self-discovery through the education process. Tip number 6, read books about real estate investing and seek the advice of knowledgeable people. I love to think that I practice this tip myself. I do read a lot of real estate books, and I try to seek the advice of people that are very knowledgeable in the field. Definition number 6, he says, a goal is something you plan to achieve. In my previous episodes, goals are only achievable by the standards we set for ourselves. Tip number 7, goals can and should change as conditions change. So I know I've talked about my personal journey and how I write my goals, and my goals are very specific and time sensitive for a purpose of achievement. So if I'm honest with myself and I'm deliberate about how I plan to achieve my goals, they're more likely to succeed than if I give general goals without timetables or general goals without a plan. He goes into the goals and his first steps into financial freedom and what that could look like for you, the investor. Myth number 4 in chapter 3, he says, you need to spend your own money to buy apartments and commercial property. Again, other people's money. Tip number 8, financial freedom often can be achieved in a decade or so. Long-term hold rentals can really maximize the velocity of your capital if you purchase a property a year for 10 years, or even double that every couple of years you're in the space. Part 2, he says how to find, purchase, and maintain a rental property. So in chapter 4, immediately, something that helped me, that I got set up for my first deal, is creating an LLC. The purpose of the LLC, of course, is for asset protection, covering yourself in the event of a lawsuit, getting sued by a tenant. So he says an LLC protects your personal assets. He goes into the process of how to create an LLC, which I love, makes it really easy. Tip number 9, you don't have to pay someone to set up your LLC, but hire an attorney if you have questions about complying with the law. Personally, I used a CPA in Naperville. Shout out to Muthu Radha. He helped me set up my LLC and made everything buttoned up and easy for me. He helps other people in the state of Tennessee as well. So if you ever need somebody and you're in our state, I have a referral for you. But certainly any knowledgeable real estate CPA can help you with this process. Just make it quick and easy for you, hassle-free. So you want to choose a name for your LLC, choose an agent, file your articles of organization. As a as a retail bank employee, I often set up bank accounts for businesses, and it's a very common document that we ask for. So when you're going to set up your LLC and you need a bank account, you're going to also be asked to show your articles of organization or articles of incorporation if you go down the corporation route instead of the LLC. Register with local governments, obtain an employee ID number. An EIN is going to be your tax ID number, essentially. He says to open a business checking account, order some business cards. Remember to file your annual report if your state requires one. Obtaining credit for your LLC. This is pretty cool. He talks about one of the next books we're going to review coming up, Garrett Sutton's Loopholes of Real Estate. He talks about opening up a business credit card. This can help start building your business credit. He gives a few examples of cards that he uses. He says to apply for a DUNS number. It's used to track credit for a business. Something I actually have yet to do, but I have that on my to-do list. So certainly very important step for building credit. Don't let them pierce your corporate veil. So He kind of discusses how to keep the LLC bulletproof by maintaining certain standards and rules. He lists 7 really important rules on page 51. You can check that out. So again, he lists Garrett Sutton's books, Start Your Own Corporation and The Loopholes of Real Estate. If you have any questions on those books, I'm going to be reviewing it as well. Chapter 5, Step 2, Get Your Investment Money. So he says there's 10 different ways to finance your property purchase. And before I get into those 10, tip number 10 is an idle asset is better thought of as a liability. So without further ado, number 1, he says you can use your home's equity. I've used that strategy before. It's really easy to do, really easy to apply for a home equity line of credit. You can go to your local banker, and a lot of banks do up to 90% loan to value. If you want to calculate that fairly simply, you take the perceived or the actual value of your home. You can go on Zillow. A lot of banks use that algorithm to determine value. Sometimes they have to order a full walkthrough appraisal, but at the end of the day, so you're gonna use that value times 90%, subtract the loan balance from that amount, and then you have your lendable equity. Very simple. So he goes into different types of loans. Tip number 11, debt is good when you leverage other people's money to invest in real estate and make money. He says what a HELOC is. I kind of just did that, but a home equity line of credit has no closing costs and is a fast way to get cash, but the interest rate can be higher. Oftentimes you can get promo rates. I know my bank does that, promo rates all the time. So, you just got to call your local bank or your national bank, whatever you're comfortable with, and see what rates are in your area. Usually it'll be prime rate plus a few percent. And then if there's a promotional rate, there'll be an addendum to that at the end of your loan docs. So an adjustable rate mortgage typically offers a lower interest rate, but the rate can be increased when market conditions change. This is coming into play a lot right now. Some people are taking advantage of adjustable rate mortgages. I think it's a great idea if you think rates will improve over a longer period of time, but there's always a risk to it. Definition number 10, traditional mortgage has closing costs, but typically offers the lowest interest rate. That's usually true. I agree with that. Tip 12, love this one. He discusses this all the time. You might have heard of house hacking. House hacking or living on your rental property is one of the easiest ways to purchase your first rental property. Having someone else pay the mortgage for you while you're living in it certainly is awesome. And sometimes you can positively cash flow from it as well. So you're getting all the benefit of somebody paying down your mortgage while also stacking cash. So it's an awesome way to do it. Definition 11, in a contract for deed, the seller becomes the lender. Tip 13, a rent-to-own contract can give you time to repair your credit and generate enough equity to cover the down payment. So rent-to-own, I discussed that through Brandon Turner, Heather Turner's book, Little to No Money Down, some good strategies in that book as well. He kind of goes into it here. And then being an escrow in a contract in which a third party, often a title company, receives and disperses money or property for the transacting parties. Passive income is income received on a regular basis with little effort required to maintain it. He talks about assumable mortgages. That's kind of great at gaining some traction right now. I know I've talked about that with several of my colleagues, but you kind of just got to ask your bank, and some mortgage loans can be assumed by other people, which means you wouldn't have to provide a down payment, but the lender has to approve it. Most mainstream mortgage companies don't allow this practice for obvious reasons, right? They have a interest rate locked in, and then you, as the new person, want to get that rate. That's not very advantageous for the lender. So he discusses what the differences between accredited versus unaccredited investors are. An accredited investor is a person or organization with substantial assets or income, usually in the form net worth of $1 million or an income of $200,000 a year, $300,000 combined if married. Good information to know for sure. Creating a business plan for investors. A business plan is a promotional flyer and is needed to raise capital from accredited investors. A pro forma financial statement makes estimates of future expenditures and income. He goes into content for building a business plan in page 65. Great example there. Now we're going to roll into chapter 6. Step 3, he says, find your ideal market. This is a really good chapter. I'm going to kind of skip over some of these details just because it's really long-winded, but kind of goes into the research phase of the finding your ideal market. The market is more important than the property itself. So if you find yourself in a hot market, you're going to be bidding for higher purchase prices. If you find yourself in maybe a slower market, you might have more leverage as a buyer, but certainly your appreciation, things of that nature, might not be as high in a hotter market where values tend to go higher. Tip number 15, look for markets where the supply of the rental housing is low and demand is high. 3 key drivers of rental market: supply and demand, and our employment, resources, and location. He says diversity in business and resources generally creates more stability in a market. Lots of valuable information here. He discusses Zillow, Trulia, Realtor.com, and other online resources where real estate websites are good places to start researching a market. If you're doing like short-term rentals, I've heard AirDNA is good. Tip number 18, page 74. Many counties with metropolitan areas offer online sites where citizens and investors can obtain tax and assessment histories of properties. If you're buying a home for rent, be sure the deed, covenants, and homeowners association allow for rentals. So kind of an important step. A lot of people don't know. Just a good reminder on that. If you're looking and an HOA has rules against rentals or short-term rentals, you want to look out for that. Tip 20, you may not need an accountant or an attorney on your first rental property purchase, but as your business grows, you'll need a team to help you make good decisions. So the more complex your real estate portfolio gets, you might have to establish limited partnership or LLCs with different umbrella insurance so that your liability is covered as much as you can. Chapter 7, step 4, find your ideal property. So he goes into how to estimate your cash flow. Mortgage payments on small rental properties should be no more than 2/3 of the total rent payment. He has a practical example of how to estimate expenses. I really love how he goes into mortgage, taxes, insurance, advertising, recreation fee, gas and electric, utilities, water, sewer, trash, maintenance, repairs, reserve, contingency fund, capital expenditures, all of these terms. If you've listened to any type of real estate podcast, you've heard these terms, but he drills down to each one and shows how they're important. Estimate your 5-year and 10-year gains. He shows some price indexes of how to kind of just put into perspective the power of the velocity of your money in terms of the equity increases. All right, so three recommendations before you purchase. Kenny says, always hire a professional and inspect the home. Be cautious before hiring a property management company. Don't buy unless you find the property that meets your needs. Simple, right? He says to make your offer. A purchase agreement is a sales contract, an offer to purchase a property. In my line of business, I review a lot of purchase contracts. You want to notate the important details of the purchase contract, which is your purchase price, conditions of the payment, your earnest money, real estate taxes, assessments and adjustments, title, possession of the property, risk of loss, improvements and fixtures, general conditions, special conditions, time of acceptance, and closing. You have your due diligence phase. Due diligence is a time period in which the buyer investigates the property and physical and financial conditions, arguably the most important piece of the process. A warranty deed is a document in which the seller guarantees he or she has legal right to transfer the title to a buyer. Insure your property and insure it the right way, and talk to an insurance agent that you trust that will give you the right amount of coverage. So he gives some practical examples again with some tables here, expenses and income and how it relates to the insurance. Chapter 8, he goes on to how to manage your property. So your relationships with tenants should be cordial but professional. A well-maintained property will reduce your risk to lawsuits. Duh. A tenant background authorization application is your best tool for selecting good tenants. He gives several websites for this. Tenantbackgroundsearch.com, mysmartmove.com, verticalrent.com. I've heard a lot of people use these, so definitely effective tools to use. Text box 8.1 shows a tenant background authorization form on page 103 for your review and a sample. The Fair Housing Act provides fines and monetary damages against landlords who discriminate. Definitely don't want to discriminate by any of the Fair Housing Act provisions. A lien agreement spells out the responsibilities of tenant and landlords. Chapter 7, major items in a lease. Property term, rent, security deposit, use of premises, condition of premises, assignment of subletting. Goes on, page 107, discusses all of them. Be sure your lease agreement addresses everything. If something is not in the contract, it does not exist. Common one would be pets, smoking, alterations to the home. So he lists a rental inspection checklist on page 109. Very comprehensive, great tool that I plan on using soon. So if your tenant fails to pay rent on time, you must impose a late fee to ensure they understand the contract must be enforced. Brandon Turn's book goes into a lot of these tips and rules, how to evict a tenant, how to evict a tenant. He discussed the formal eviction process. 5 valid reasons to evict tenants include non-payment of rent, lease violation, crime or drug-related activity, property damage, and expiration of lease. So part 3, how to manage your money. So chapter 9, do your books. So bookkeeping is very important. Don't ignore it. QuickBooks, good tool. 4 tips of bookkeeping. Open a business checking account. Simple. Select an accounting method. Cash or accrual. Select an accounting system. And then he goes into some of those definitions of terms again. Record income and expenses. There's a lot of deductible expenses. Depreciable expenses include loan closing costs and remodeling expenses. The standard mileage deduction for use of a vehicle for business is nearly 60 cents a mile. Some of these rules might have changed in the tax code, so double check with your CPA. Double entry accounting creates a balance sheet based on actual costs rather than market values. So in chapter 10, step 7, file your taxes. Kenny goes into what a Schedule E is. Are you a real estate professional? Real estate professionals get a tax advantage. They can deduct losses from other income. So very valuable if you have a spouse that's a realtor or a real estate professional, or if you yourself are a tax professional or a real estate professional. He talks about property income, expenditures, calculating depreciation. Section 179 of the IRS rules allows large ticket items like refrigerators, computers, and stoves to be fully deducted in the year they're purchased. You'll need to issue a 1099 form to any contractor whom you pay more than $600 in 1 year. He shows what a W-9 form looks like. Home office deduction, meals, entertainment. These are really good things to be aware of. And if you have a good tax professional, they'll help you navigate through these tax provisions. Some people call them loopholes, but the IRS wants you to take advantage of these things because ultimately, you pay your taxes. You're doing what is intended. You're putting money back into the system. You're creating jobs, hopefully, and spending money into the economy by stimulating it through property ownership. So if you do these things correctly, according to the law, it's a win-win for the government and for you, the taxpayer. What is the value of the property? Do you earn income on the property? So they break it down to what that looks like in this example with John. That's on page 138, 139. And then let's see. Chapter 11, Step 8, Boost Revenue and Cut Costs. So consider refinancing your rental properties in 3 to 8 years when enough equity has accumulated. So he discusses increasing your rental rates. Historically, rent rates have risen faster than the rate of inflation. Something to keep in mind with our current buzzword, inflation. Demand for housing and mortgage rates. Rent rates tend to increase as mortgage rates increase. Goes over apartmentlist.com as a resource. Discusses the cost-benefit analysis. Some useful charts again in this chapter. Small increases in rent can amount to a lot of revenue over time. If your property is paying 20% more than others that recently sold, you might file an appeal with the property tax assessing authority. You lose nothing if the authority rules against you. Chapter 12 in Step 9, Building Your Rental Portfolio. He discusses how to do that really holistically, using other people's money to maximize return on investment, depreciation, capital gains taxes, doing a 1031 exchange, which I thought that was one of the most valuable pieces of this book, something I knew about, but I heard about first from this book when I read it, and it wipes out depreciation tax. So there are 4 ways to do a 1031 exchange: simultaneous, delayed, reverse, and construction. To reduce your capital gains on the sale of rental property, consider moving it into it 2 years before the sale. In order to qualify for the reduction, you must own the property for at least 5 years. Chapter 13, Step 10, Further Your Education. Again, the importance of education to thrive in a free market system. You have to continually educate yourself. I believe this is more than true. It is the law. Being your own boss is the best way to secure your job. Again, I'm not going to quit my day job. I'm going to do supplemental real estate investing because I think W-2 income is still very strong. I think if you follow Robert Kiyosaki, you have the 4 different quadrants: an employee, you're a business owner, you're self-employed, or you're an investor. If you operate out of all 4 vehicles, it can be very advantageous for sure. So personal development is a lifelong process in which you assess your skills and aims in life to set goals to maximize your potential. McElroy.com, he has a lot of resources there. He lists some other real estate investing resources, including the National Real Estate Investors Association, the American Apartment Owners Association. I signed up for that, and you get a free membership. You get emails. It gives you valuable information digitally, so you can use. But in conclusion, he states that, if you learn the concepts provided in this book, you'll take an important step toward your financial independence. And then in the back of the book here, he gives several online resources as well with the Rich Dad Advisors for real estate, asset protection, tax planning, paper assets, sales strategies, and different summaries, appendixes, and then graphs and charts as well. So just very comprehensive again, but this one is like, it's kind of like the Mac Daddy of, it really is the ABCs. Like, it's in the title. It's got everything you would need to have a high level overview of the real estate investing, buying, rental property process. So again, hope you enjoyed this episode. Going to be hopefully releasing another interview that I had recorded. I had to re-record just due to technical difficulties. So that should be coming out soon. But again, like and subscribe if you enjoyed, and bippity boppity investment property. Let's go. See you next week.